Hey there, friend! Welcome back to the Closing Chapters podcast, where every mission has a story. We can help backtrack and know what our most common price points are going to be for the year, whether it's for rentals or sales, right? This is very important information when we're helping our clients if they're selling or buying or deciding whether they want to rent or buy, and having those conversations so that they can make a really good decision. Hey friends, welcome back. We have some stuff to talk about. If you happen to be enlisted and stationed in the Fort Bragg area, let's talk numbers. As you all know, the 2026 housing allowance numbers have come out. And this is really important for realtors to understand and wrap our little brains around, because we can help backtrack and know what our most common price points are going to be for the year, whether it's for rentals or sales, right? This is very important information when we're helping our clients if they're selling or buying or deciding whether they want to rent or buy, and having those conversations so that they can make a really good decision. Now, if you know, in the military, most of the time, military members would like to try to keep their house payment as close to or under their basic allowance for housing. And that is because their actual pay is really not a lot either. So they're trying to make sure that they are utilizing just this amount to the best of their ability. A lot of military families are not dual incomes, or the spouse is not working full time, especially if they have little dependents. And that can make this very tricky and hard. Or when we're transitioning, if I had a normal brick and mortar job, so to speak, and could not take that with me where I could maybe work from home and be online, then I'm probably finding a new job and may not have a job offer lined up yet. So therefore, for the purpose of purchasing a home, we can only rely on the military income, right? So this is really important for us to know this as our baseline expectation for most military families. So here is the enlisted ranks for 2026, E1 through E9. We are from 1341 up to 2,244. Spoiler alert, my mortgage is more than the E9 housing allowance. And I have a very modest plain Jane house that we purchased when we moved to North Carolina. So all that to say, this is not a big allowance in terms of what the housing market looks like right now, okay? And this, my friends, is why if you have a property online right now for resale, this is why new construction is sweeping it out of the waters right now, because they are able to get very close to these numbers because they are jacking down these interest rates, because most builders have a relationship with or co-own a mortgage company, and they can control the rates that they are providing. And also they're providing these huge incentives to pay for closing costs or pay down the rate. So we're going to see how this all plays out. So I have taken these numbers and I'm going to show you kind of what the numbers look like, okay? So if we are looking at a mortgage, I'm going to pull up my handy dandy amortization spreadsheet. Okay, so there's that 1341 number all the way to $2,244. If we are looking at a $225,000 house, assuming you're a first-time home buyer, the funding fee would be the 2.15. Okay, so once we add in our funding fee, our total mortgage value is just under $230,000. If we are at an average of a 6.5% interest rate at 30-year mortgage, your bottom, like your just basic principal and interest payment would be around $1,450 a month. Okay, well, that's already higher than the lowest amount that we could possibly receive. All right, but that was with non-dependents. If with dependents, it was $1,722 is where we started out at. Okay, so $1,722. So we're doing all right there, right? But this isn't our whole payment. We have to add in our escrow account, which is our insurance and taxes. Now, this is just a basic WAG, and I'm not going to adjust these numbers when we go up. So you need to understand that this has variance, right? This is not a fixed thing. For the total tax amount, I did about $2,400. This should be relatively safe for this area, give or take a little bit. And then I did about $120 per month for homeowners insurance. Homeowners insurance rates are like all over the place. This is one of those things that you really need to get quotes and find what is going to suit you best, because some of them have been very reasonable, and I've had some of my first time home buyers that have had astronomical quotes lately. So just know this could range quite a bit. Now, I also don't have anything plugged in for HOA fees right now, so keep that in mind. If you end up going to a neighborhood that's an HOA, you need to factor that in as well. Okay, so all of that said, at $225,000 sale price, our final payment would be around $1,772. So just over that $1,722 mark. That's relatively reasonable. So that means our lower enlisted E1 to E4, E5-ish, they're going to be in this $220,000 range, right? This is what's going to be comfortable to them is anywhere from probably $215,000 to $230,000, okay? So that is going to be bucket number one, is $215K to $230K. All right. So then if we're going to bump up a little bit, let's look at what would $250 look like. All right. $250 puts our base payment, just principal and interest, at $1,614. Our full payment at about $1,934. Okay. So next bump is going to be probably that $230K to $250K. Ooh. Now, $1,934. Let's go back over to this chart real fast. $1,934. That literally puts us at like an E6. Okay, so E5 to E6, E7, this range. All right. So let's come back on over here to our handy dandy spreadsheet. All right. So we're saying probably E1 to E4, E5 to E7-ish. All right. And then that puts us at the 1914. And let's bump to 275. 1, 2, 3. All right. That puts us at 2,095. So we have a little bit more wiggle room. Let's try 300,000. See what we look like. 300, 1, 2, 3. All right. That puts us at $2,256. So that's just right at or above that $2,244. So we're talking E8 to E9 is probably going to be in that $250K to $300K bucket. All right. This is where comfortably they could afford the price brackets they could afford if they're purchasing within their housing allowance. Now, this doesn't include utilities, right? So if we're factoring that in, then we're going to be towards the lower end of all these brackets. And this is also not including HOA. And once again, this is an estimate on taxes and insurance. So this could all vary quite a bit. Now, here's where this gets tricky, right? So if we're looking at resale values, we're looking between $215,000 and $300,000 is going to be our sweet spot for our enlisted families, which makes up the bulk of our installation, correct? So if we take this $300,000, all right, and we set the payment for, I'm going to run out of space here. Let's see. We set our payment for $300,000 was going to be the base payment with taxes and insurance was going to be $2,256. Okay, so we're going to hold that number right there. I'm going to put it over here actually. $2,256, and this is for $300K full payment there. All right. Now that's 6.5% interest. Now we have new construction that's going to $499. That's what I've seen commonly. So if we drop this down to $499, whoa! All right, we just went down a couple $100 on our payment. So we're at 19. I'm gonna round up 65 for 300 cal. Okay, at 4.99%. So how much of a difference is that? It's almost a $300 difference a month, right? And the interest rate difference there. So at 1936, we are bumping back into that E5, E7 range. So all of a sudden, everybody else can afford a $300,000 house because it's new construction and the rate is lower. Now, let's still say that we have that $2,200 mark. So at new construction rate, what does it look like if we go up to $350,000? All right. At $350,000, it's $2,237. It is still less than our bucket, right? Our full bucket there. So this is why, if you are in resale, new construction is your competition right now. As long as they are offering these silly low rates, it is going to be very, very hard for someone to afford as much house. Now, unless people have some cash set aside, this can still get tricky because sometimes people would prefer to have a fridge, blinds, a fence, right? All those type of things. Maybe some extra upgrades in the house already that are not going to exist with new construction. And also, it's very common that new construction may or may not have as much space, right? So maybe you're wanting an existing house in a bigger neighborhood with bigger lots. So there is definitely some variance here. But my point is that we need to understand that, one, this is why new construction is our competition. It's very hard to beat out new construction right now because of the interest rates. And two, these are our general price brackets for resale that we're looking at. Now, also, if you are looking to sell or rent out your property, okay, you need to be between $1,341 a month and $2,244, reasonably speaking, for your rent. This can be very hard if you bought high at a high interest rate. So let's say that you had to buy a house for $350,000 with a higher interest rate. So let's just say you were at 7.25, all right, which is still below the national average. But 7.25, if you bought that at $350,000, then your payment is probably close to $2,800 a month. Well, that means you're $500 shy, right? That's really tough, and this is what we are having to have conversations about and help people through. Now, that $350,000 house, if they bought it 2-3 years ago, has not appreciated enough unless they have paid down some of the value to let them sell it again and be able to get out from underneath of it, okay? So what do you do? What do you do in this situation? And we've talked about this a lot, but I'm just going to rehash it out. All right. My view is, if you could swing it, if you can swing it, I would try to go up a little bit on the rental rate and see if you could get $2,300 to $2,500. And if you're only a couple $100 shy a month, then make up the difference, and then in a year or two you're going to have more equity. The appreciation is going to continue to go up, and you are going to be able to sell it and recoup all of that, right? Because let's just say we're talking $500. So let's say 500 times 24. All right, that's $12,000. $12,000 you're in the hole, having to make up additional payments for 2 years, okay? But if this house if it appreciates and you continue to pay down, there's a chance that maybe you'll make $20,000, $30,000 in 2 years, okay? So you will get all of that back and more. But we have to make sure that you can clear it. Now, some people are at the point where that's just not possible. They don't have the extra funds to be able to clear the payment. So what next? And what I would say is, if you're in a position where you could be flexible and potentially turn it into a short-term rental or midterm rental that's furnished, then you could probably make your full payment. And if you know, that's an option that we have selected. We took our first house and we actually moved about 45 minutes away because that's where life took us with our kids and our family and our church. So we are renting currently, and we cannot sell our house because the numbers don't work. And we cannot rent our house because the numbers don't work. So we have turned it into a furnished rental, and that is clearing our mortgage payment. So there are a lot of different avenues and ways to think about this. So I just want to make sure that you are able to see from the consumer point of view and the realtor point of view what really needs to be important, what we need to focus on. So just so you're tracking anybody that's looking to sell, if you are looking to sell this year and you are going to be between $215,000 and $300,000, you will probably be able to sell your house very easily, okay? Because that is what's going to be within the housing allowance bracket. So this is just something to keep in mind. And if you're looking to purchase and you know maybe you're going to be moving in 2 to 3 years and you may not have a whole lot of equity and you do not want to keep your house and you want to be able to sell, then once again, you need to look at these price points and try to be within this bracket. That's kind of hard in this area. I'm not going to lie. It's really hard to get a lot of house for $300,000 here. So I want to just put this in perspective for you and let you know that housing truly is tough. And it doesn't mean we can't do it. It doesn't mean it's unreasonable. But this is also why, once again, new construction ends up being a pretty darn good hack for us, especially if you are buying this time of the year. So if you need help navigating any of this, if you're looking to make a move in 2026, whether you're selling or buying, and you're going to be in the Fort Bragg area, selling or buying, then please reach out to me. I would love to help you navigate this a little bit more and let you see how the numbers work so that we can make a really good educated decision. So here you go. That is the Enlisted breakdown for 2026.
Hey, I just wanted to say thank you for being here and listening in on this episode of Closing Chapters with me. I truly enjoy putting this content together, and I hope that you enjoy it too. If so, could you like, subscribe, and share this episode with somebody you know that will enjoy it just as much as you did? Thank you so much.